Alrighty, guys, let's go ahead and get started with this week's weekly outlook. Thank you guys for joining us today. If you guys are hopping on for your first time, my name is David Schinkel. I'm the CEO and founder of Positive Traders. I run this free weekly outlook just about every Sunday for you guys for free, just to give you guys my outlook, my bias on the markets. Just a couple healthy disclaimers. This is not financial advice, guys. So this should be taken as education. And please do not be placing any trades just based off of what I tell you guys on this webinar. As a professional trader, when I open trades and I'm doing my analysis, I always fall back on risk management and risk to reward. Being able to achieve a high risk to reward on the trades that I place consistently allows me to be less accurate in the markets. I'm able to win 60–70% of the time. My portfolio actually fluctuates between 76 and 77% win rate, but even I can win 60% of the time and still profit long-term in the markets. I have showed you guys in past webinars how you can profit even you can win only 40% of the time, or apologies guys, just a moment. Sorry about that, guys. I just had someone buzzing up to my floor. So I have shown you guys on past webinars how a 40% win rate or a 50% win rate can make you still a profitable trader in the markets as long as you focus on consistent, good risk reward in the markets. So let's go ahead and get started, guys. We're going to first be looking at the economic calendar. There's not a whole lot to talk about this week. On Wednesday, we have a couple high impact news. We have some quarter-over-quarter CPI for the Australian dollar. We also have President Trump speaking on the US dollar. A couple other things. We have consumer confidence, which is key. We have a couple of actually different CPIs. We have a trimmed mean CPI and just a standard CPI for the Australian dollar. If you guys are in the premium group on our last daily live webinar, which I run 4 extra webinars a week for my paid members. On our last one, Friday last week, we spoke on GDP and CPI, what those were, how they affect the market, the importance of them, pretty much a brief breakdown. But Wednesday is going to be a pretty key risk event. Lots of things that are coming out. Among those other things we just spoke with, we do have the CAD GDP as well, so gross domestic product. CPI stands for Consumer Price Index. Basically, that's an inflationary measure. GDP is a health measure. For the US dollar, we have ADP, non-farm employment change as well. That happens before Friday. Thursday, we have our federal funds rate. So we are having NFP coming out this Friday. So it is going to be the first Friday of this month. What is going on, Sheldon? Good to see you in here. So we'll see what happens. We are looking at unemployment rates staying the same. Average hourly earnings are staying the same as well. That is the forecast. And the actual NFP report is supposed to be somewhat good for the dollar. Generally, a number around 200K is showing good strength, good growth for the dollar. So that's what we'll be looking for. Let's go ahead and jump into the technical analysis for the week. So starting off with the dollar index, guys, obviously, you guys know last week we had a lot of volatility in the markets. We have had the most volatility that we have seen since April of 2017. So almost an entire year. We have not seen a single week with the most inflation that we saw last week. So we saw a lot of weakening in the dollar. We saw the big bear flag in consolidation range that the dollar index was in broken, creating lower lows on the dollar. We could see our next targets much lower for the dollar. It'll be kind of interesting to see. I'll let you guys know that right off the bat, that to begin this week, I'm going to be having a wait and see approach. I'd like to see these Sunday and Monday daily candles close and see where they close to give me an idea of where price is going. It'll be kind of interesting to see if the week is going to continue, if the dollar is going to continue weakening this week, or if we're going to get a pullback. I think that's going to be determined by the first couple daily candle closes of this week. But we have seen a lot of weakness. We have seen a pretty fair drop in the markets. So it'll be kind of interesting to see what happens, but I think that we could potentially see a pullback in the markets. We may see the dollar index come to retest the previous lows. Right over here, let me mark it up on the charts, guys. Right over here marks off last year's lows, which we broke not last week, but the week before last. So we may be coming back up to retest those lows and then ultimately go lower. You guys know that my long-term outlook on the dollar index has been weaker. It has been following. If we actually put the dollar index on a weekly chart, it's a little bit clearer. I'd recommend if you guys are doing your analysis for each week to definitely use, scale out, do a top-down analysis where you start off on the weekly or even the monthly. Usually I won't go out on the monthly unless it's like the beginning of a month, which we're actually going to see the beginning of the month of a new month in just a few days. But I'll usually start on the weekly, drop down to the daily, go down to the 4 hour, then sometimes the 2 hour, 1 hour, or 4 hour, 2 hour, and then 1 hour. I usually won't go any lower than that. Sometimes to place my entry, most of the trades that I personally place are based off of technical analysis on the daily and the 4 hour. And then usually to set my stop losses or to perfect my entry to be able to get a little bit better risk to reward, I'll usually enter and place my trades on the 1 hour. So that being said, we can actually see if we look at the weekly chart of the dollar index, very, very bearish week for the dollar last week. You guys know that, or if you don't know, you're about to know that the U.S. government was shut down for a few days, shut down last Saturday, and was shut down for a couple of days while the government was basically deciding on spending. They were deciding whether they had reached essentially their spending limit, and they had to determine whether to cut budgets or to raise the debt ceiling or raise the spending limit. So they did decide to raise their spending limit temporarily. It's always temporarily. That's why we usually see around this time every single year. Now, the government actually, the U.S. government, the last time it shut down was in 2013. And so we haven't really seen the government shut down since then. But if you guys, especially if you follow U.S. politics and U.S. economical news, you know that pretty much around this time every single year we see the government getting close to shutting down, but usually they come to a conclusion of what they're going to do before that date actually happens. Obviously this year we did not see that happen, and we saw the government shut down for a few days while they had to continue deciding that. But again, overall, my opinion from a technical standpoint is specifically on the dollar, which affects most of the pairs that I trade, if actually all of the pairs that I trade. I'm taking a sidelines, wait and see approach to determine where price is going. But I think a pullback would probably be due in the markets. There's a couple setups. We're going to look at AUD USD and NZD USD. Both of these have very clear, clean setups that I'm just waiting for, that I'm on the sidelines waiting for to happen, which we'll go over. One reason why I also think we may see a pullback on the dollar is we know that the dollar index and gold have a negative correlation to each other. So when we see one go up, we see the other go down, or vice versa. And we're seeing gold. Actually, first things first, let me also say that gold hit our long-term target of 1350. Ever since, if you guys have been following consistently on these weekly webinars, ever since we broke through the 1300 level and we consolidated between the 1310 and the 1320, I told you guys that my long-term bias on gold and my long-term target was 1350. If you go, probably 3, 4, 5 weeks back, you'll see I've had this green zone on the chart for quite some time now, talking about price moving to this area. So, same thing with gold. I want to see what's going on, but it'll be kind of interesting to see what happens. Let me just give you guys an example of price action of what we've seen around the 1350 level. Around this area, we've seen, I would like to potentially look for long-term sells on gold for now. However, I'm not going to jump into sells. I need to see one specific thing, and that's going to be a bearish engulfing candle on the weekly. If we can get that bearish engulfing candle on the weekly, I'll look to sell gold probably back down to at least at the 1300 level. But I just want to give you guys some examples of where we've seen price action find resistance at the 1350 level, and then the week followed was a bearish engulfing candle. So you can see that happen right here. We can see that happen right here. Oh, let me circle that one a little bit better. Right there. We can also see that happen right here. We can see it happen. Now this is a little bit more of a fake out, but it happened right there. This wasn't technically bearish engulfing. That this red candle is just about the same size as that blue bullish candle. But when you see a very bullish week or a very bearish week, and you see that following week retrace 100% or more, that's why you would get an engulfing candle, is if it retraced more. In this case, this was just a 100% retracement. That shows a strong presence of the opposite side of the market, where in this case, the first week we saw a strong presence of buyers in the markets, followed by a very strong presence of sellers. So we've seen this 1350 area act as a very strong level of resistance for gold in the past. So I'll be very interested to see what happens this week in the markets. If we do happen to get that bearish engulfing candle, if we do start to see that dollar strength, I think that the pullback on the dollar will be very, very large. And I think that we will see a pretty significant drop on gold, just like we did, in the past when we saw these bearish engulfing candles. So just something to keep your eyes on. This is also very similar to what we're going to be looking on AUD USD and NZD USD, but we will get to those. Euro USD, I'm not super interested in trading right now. Euro USD is at a very, very significant level as well. I've drawn two different trend lines. This is you guys probably don't see me do this a lot, but this is a strategy which allows you to see a couple different angles of trend lines and a couple different areas where price could find some sort of resistance. So since this is such a large time frame, since we're working on the weekly, I don't do this on every time frame. I don't usually do this on, like, let's say the hour or the 4 hour. I'll usually save this for something large like the daily or the weekly. But we are coming up to this major resistance zone after a very bullish week on a weak dollar last week. I'm not really, again, just like the dollar index, because this is the opposite of the dollar index, I'm really not interested in jumping into a trade right away. I am taking the wait and see. I have the wait and see approach in mind right now, and I want to see how the markets react. But I do think a pullback is not completely out of the books. Noble, you asked, just quickly question, you asked what broker do I use? I use FX Choice, so just www.fxchoice.com. Pascal GBE brokers, never heard of them, probably not a recommended broker. FX Choice is very good. I've been with them for many years, no issues whatsoever, very low spreads, great customer service, very fast withdrawals. Deposits are very fast as well, just very safe. They're a regulated broker. Make sure you're with a regulated broker as well. But yeah, that's just my answer on who I use as a broker and why, because they are regulated. So USD Swiss franc. USD Swiss franc, we saw a very weak week. If you guys do not know the correlation with USD Swiss franc, you should know, and you should definitely have this written down, that Euro USD and USD Swiss franc do the opposite of each other for the most part. Now, is that all the time? No. Is it most of the time? Yes. So we obviously saw a very weak pair on USD Swiss franc last week, very weak exchange rate on this pair, and Euro USD we saw a very big rally, a very high exchange rate last week on that pair. So they obviously moved negative to each other. We've also looked at the correlation charts before on these webinars, and I've shown you guys that Euro USD and USD Swiss franc on the daily time frame have something like a negative 94, negative 96% correlation to each other. So going to be taking a on the sidelines approach with USD Swiss franc as well, because it does have a very strong correlation to Euro USD and dollar index. I think a pullback is in the cards, but I want that to be confirmed to see where the daily and weekly candles close at. Let's go ahead and look at pound dollar. Pound dollar is also hinting at some potential weakness this week. Towards the end of last week, we did see this bullish run come to a little bit of a halt. Thursday's candle we did see as a really, really big bearish candle. We saw Friday the bulls start to take control, start to rally up, but as we finished up the week, we saw a very big exhaustion candle and a strong presence of sellers in the markets. So I think some possible downside on this pair is could be in the cards. If we do see some downside, look at this trend line. I'd have this trend line drawn on the 4-hour, but I'm really not interested in trading either of the pound pairs, guys. I haven't been really too fond of the pound pairs. Yes, we look at them. Yes, I obviously keep an eye on them, but are they the best for trading right now? In my opinion, not the best. I think if you were going to trade this move to the upside, I think a better option would have been in this area. We did not trade this because we did not get a retest. So pretty simple. We stick with the plan. We stick with analysis, the same trading strategy, and we're consistent with it. And if we don't get that price action in the markets, we don't trade it. Ava Trade XM, you guys are just talking about some brokers. GB pairs looks like some downside coming. Yep, Sheldon, I could definitely see that in the cards. Yeah, you guys are listing some different brokers. Sheldon, you mentioned XM. I know XM is good. They do not accept U.S. brokers. Another good one is Pepperstone. Pepperstone is a good one. They don't accept. They don't accept U.S. clients, and neither does Pepperstone. So I use FX Choice, guys, because I'm in Australia right now, but being based out of the U.S., it is very hard to find a good broker, and I've like I said, been using FX Choice for a very long time. So let's go ahead and look at pound yen also. Yeah, pound yen looks like some possible downside as well. We saw the past 2 days on pound yen very bearish. We saw Thursday's and Friday's candle pretty bearish for pound yen. I think some downside could definitely be in the cards for both this pair and pound dollar. So I think pound pairs could definitely find some weakness this week, but again, I am going to sit on the sidelines while I watch the dollar index. Dollar index is kind of like my barometer, kind of my gauge of how I'm going to trade in the markets. If you guys don't really understand the dollar index, please watch some of my past webinars. Especially there's one on YouTube called How to Read a Chart. I actually break down the dollar index. I break down this, the very important trend lines, the monthly and yearly support levels for the dollar index and my kind of key levels. And that's on it's on our YouTube channel. If you just scroll through our videos, it's called How to Read a Chart. So let's move over to dollar yen. Dollar yen, very similar. You guys should know the correlation between dollar yen and the dollar index. When we see a weak dollar, we generally see a weak dollar yen. And that is, so to translate in that to other words, if you guys don't look at the dollar yen, if you see a strong Euro USD, you see a weak dollar yen. So Euro USD and dollar yen have a very strong negative correlation to each other. Generally, when you see one go up, they'll see the other go down. Again, take correlations with a grain of salt, guys. Do they always move together? No, they definitely do not always move together. It just kind of depends on do they always have a negative correlation? No, it just kind of depends on what is happening and what type of influence the dollar is having on each of those markets. Let's see, the dollar index and the USD 10-year treasury notes, the treasury will drag the index up and down. Absolutely. Pascal, I think dollar yen go to 107.50 and then go up. Should be interesting to see where the dollar yen goes from here. If we do continue to have a stronger or another weak downside week for the dollar yen, I think that is very possible just because of how bearish the weekly candle is, how heavy of presence the sellers are in the market right now. But we are also at a pretty key level of support, so I wouldn't be surprised to see a bounce in this level or at this level. Again, guys, with pairs like Euro USD, USD Swiss franc, gold, dollar yen, the pairs that we've looked at so far, I am not interested in trading either of these pairs right now, just because it's a wait and see approach, guys. I haven't seen this kind of volatility in the dollar index since April of last year. So I need a couple daily candles to close to kind of get an idea of who is in control of the markets right now. Noble, do I use harmonics? I think I spoke on this last week. I don't use harmonics. The way I see it, I know there's companies that have like harmonic scanners out there and this and that. You guys know who I'm talking about. And at the end of the day, it's as simple as this. If there wasn't, harmonics have been around for a very long time, guys. If you guys don't know who Scott Carney is, he is the person that created harmonics in the markets, or he's the one that created harmonic scanner, the whole idea of harmonic trading. And the way I see it is harmonics is just like using a moving average, or and you guys can see I have moving averages on my chart, or it's just like using RSI, or just like using stochastics. It's just an indicator. It's just one technical indicator at the end of the day. But it's as simple as this, guys. If there was an indicator that worked and all you had to do was wait for the harmonics to line up and then you buy and sell every single time, every single person would be millionaires, right? Every single person trading would be millionaires, right? But the fact is that harmonics don't work by themselves, just like moving averages don't work by themselves, just like RSI doesn't work by itself. You need to have, it can be used with confluence of other indicators. All right. Let's look at, so these are two pairs. I want to show you guys two pairs that I am very interested in. They are on my watch list. They may not be ready. I use a trading journal? Of course, man. Yeah, of course. I mean, I've been trading Forex for many years. I trade it full time. It's obviously, you got to have a trading journal if you're going to be good in the markets, guys. You can't keep everything up in your head. You have to be able to write things down. Okay. You have to use a trading journal. So AUD USD and NZD USD. I want you guys to look at these charts. Okay. On the weekly time frame, AUD USD, I want to show you guys a previous rally that we saw on AUD USD. All right. We have not quite gotten a full extension yet. I think we need to go a little bit higher. I think somewhere up in this range would be a potential sell area where we might break this trend line. But the last time on AUD USD, we were in a very, very, very bearish trend. Once we broke that support of that trend, we saw a lot of downside on AUD USD. And I think that is what is coming. I'll tell you guys right now that may not happen this week. I told you guys this, if you guys are premium members, I told you guys this in the premium webinars from last week, that keep this on your long-term watch list. We're also going to look at NZD USD as well. But both of these pairs are in very bullish moves. So I'm not quite interested in selling just yet. But if and when the support of this extension and this support of this channel breaks, look for some major downside. Look for another strong push to the downside. So very quickly, if we measure this extension too, if we measure this move from the bottom all the way to the top, that is up 739 pips. You guys can see that number right there. So if we take the bottom of this extension, we're looking for about 700. Oh, let me redo that. About 739 pips. So you can see that it's actually that full extension would be somewhere around actually a little bit higher than the top of this trend line. But so that's why I'm saying that it may not be ready to go down. It may want to have another week or two. I'd say probably no more than 2 weeks at the most of continuing this bullish uptrend. But again, guys, I said this in the beginning, this is a very clean move, I think. I think that this is going to offer some very good risk to reward for the downside. This is obviously I'm going to be looking for a swing trade if and when I do look for a sell. But just an example, just something that you might look for in the markets. You notice how when we got a previous breakout of this trend line, it ended up being a fake out. We moved back up just one more time to retest the highs of this uptrend. And then that following day, we saw a big, big red candle and then a little bit of a bear flag. I think somewhere around here would have been a perfect entry, taking a sell on the break of that bear flag, probably a stop loss somewhere in this area. And then, you could add your stop loss down here for, you know, 1 to 4, 1 to 5 risk to reward. So look for something. You guys know that the same markets tend to repeat themselves, right? Patterns tend to repeat themselves. So just an idea of something to look for in the markets. Okay. I also want to outline another thing of why I think it's important to look at AUD USD and NZD USD also right now. We are coming up to a pretty significant level of resistance for the Australian dollar. We have seen some resistance in the past right here. We've also seen some resistance in the past back here to the left. And we also saw some support from that first original dip back in 2015. So this is a pretty key level. And if we break through this area, it's probably going to have a spike up. And then, like I said, if and when this trend line breaks, look for some serious downside. But we're seeing a very strong rally. We've actually gotten 1, 2, 3, 4, 5, 6, 7. The past 7 weeks on AUD USD have been extremely bullish for this pair. And look on the charts, guys. Just go back 2 years for a second and tell me the last time that you guys see 7 weeks in a row where price is bullish. The last time I see that is early 2016. Just like I told you guys, you know, I said in the beginning of this, we haven't seen, actually that was April of 2017. So it's almost been actually 2 years since we've seen this this strong of a trend on AUD USD. So very interesting time in the markets, to say the least, right now. The past week has been very atypical. It's not been your normal trading week, if you will, per se. All right. NZD USD. This is something I'll drop you guys just a couple nuggets, something that I've noticed on the New Zealand dollar US chart. Anytime the weekly time frame, the weekly candle seems to make a bearish engulfing candle, very similar to gold, I'm going to outline all of them, we tend to see a pretty bearish couple weeks following that bearish engulfing candle. So at least 1 week. So just a couple areas on the chart where we've seen strong bearish engulfing candles. This one, obviously, I'm not worried about too much, but the key level that I'm pointing out, guys, is this major area of weekly resistance on this pair, where we've seen bearish engulfing candles in the past, and then I'll show you guys again. And then those following weeks, we've seen a bearish trend. So on New Zealand dollar, US dollar, very similar to AUD USD. All right. In the past, we saw a very, very strong move to the upside on the New Zealand dollar, and then a very, very big move to the downside. Right now, we are seeing that move to the upside. Also, let me just go back to the weekly very quickly. Let me show you guys this range that we have been in on this pair for many years now, actually. So since 2016, we've pretty much been inside of this range. We had one fake out back in early 2017, actually middle of 2017, right here. One big fake out on this pair. But other than that, the past 2 entire years, we have stayed inside of this range. So it's going to be very interesting to see how price reacts to this resistance. But I would be more biased to long-term staying inside this range. Just like I said on AUD USD, is it ready to come down right now? Probably not. I think, obviously we're seeing a very weak dollar. We're seeing a strong rally on AUD USD. We're still seeing a strong rally on New Zealand dollar, US dollar. But again, from a technical standpoint, watch the markets. Watch the support. When the support on AUD USD and NZD USD breaks, expect some significant downside. So out of all the pairs that we've gone over today, I think that AUD USD and NZD USD looks like the most appetizing to look to trade. But again, still sitting on the sidelines, want to see what happens. So we'll go with that. And USD CAD, still very long-term bearish on this pair. Still expecting some strong downside throughout 2017. Do I think it's going to hit this target this month, next month, the month after? Maybe not. We might not see this target hit until late this year, quarter 3, quarter 4 of 2018. but this is still my long-term expectations for this pair. Let me also show you guys from a weekly standpoint. We saw a very, very bearish week last week. Some pretty nice price action. I think we could see some more downside on this pair this week. It'll be interesting to see what happens. A correction may be possible if we start to get some if we see a very strong presence of buyers in these markets. We may see buyers push back up either to this previous support of this range that we were in, which would obviously now be resistance if we came into this area, or possibly retesting the resistance of this consolidation before moving lower. But long term, still biased to the downside. Short term, I'm neutral. Again, just like the dollar index, I want to see a couple daily candle closes before I jump into anything. Sheldon said, I'd like to see UCAD recover before looking to sell again. Exactly. Same here, Sheldon. I'd like to see price. Well, I'd like to see the price action, form something for me to take some sort of trade on this pair. But ideally, like I just mentioned, I'd like to see price come back up to test, previous resistance, previous support levels before looking to take a long-term sell. I don't like selling this low in the markets after such a big move to the downside. That's that, guys. That's pretty much it for the week. So keep in mind, guys, Friday, if you're doing any trading this week, I'd make sure you do it all before Friday. Stay away from non-farm payrolls, which we have on Friday. Also, Thursday is going to be very volatile as well. We have another rate statement for the dollar. Last rate statement we had was at the end of December. This happens 8 times a year, guys. So the federal funds rate, when they releasing the FOMC releasing a statement, this happens 8 times a year. If you guys don't know that, it's a very, very volatile thing for the dollar. Most likely, they are not going to be raising interest rates or decreasing interest rates. They tend to do that more towards the end of the year, quarter 3, quarter 4 of the year. Usually don't see the first federal funds rate of the year where they raise interest rates. So it'll be kind of interesting to see what happens. And that's it, guys. Just very, very volatile week, expecting towards the end with the rate statement, NFP, a couple big things, CPI, GDP for a couple different pairs. So just stay on the sidelines, guys. Trade with caution. As always, make sure you apply proper risk management. And Cody, awesome. Looks like you're from Arizona as well. Bear down. Absolutely, man. And have a good one, guys. If you have any questions, feel free to reach out to me. Facebook, Instagram, Telegram, however you can get a hold of me. I do find time to reply to all of your guys' messages. And this replay is on our YouTube channel. Just search Positive Traders. You'll find over 100 recorded videos on there from myself. So lots of educational content if you'd like to go through. But that's it, guys. I'll catch you guys, free members, on next week's weekly outlook. And if you are a premium member, I'll catch you guys tomorrow at 10 p.m. Eastern time for our first daily live webinar of the week. See you guys later. Have a good week. Take care, guys.